Namaskaram. So next clause is clause number 16. Again, this clause was introduced to capture if assessee is hiding any income or not. So again, the purpose of this clause is anti-evasion. So as an auditor, you need to check whether any income is hidden by the assessee or not during the previous year. Amount not credited to the profit and loss account. So look at the heading of this. Amount not credited, and why something which is received by you is not credited to profit and loss account, you need to go and check. Okay, so any item which is falling within the scope of section 28. What is section 28? It's a charging section of a PGBP chapter. It talks about what all should be taxable under the head PGBP. I believe you already have the idea of section 28, but let's quickly go through it and see what all items are there in section 28. Definitely the first item everybody knows, any profit, income from business, profession or vocation. Vocation means dancer, singer, cricketer, sport people. So whatever income they earn, even that is taxable. Taxable here in PGBP. Not only that, there are certain compensation received or other payment received by whatever name called, okay, in connection with termination of his management or modification of any terms and conditions. So you are either cancelling the agreement or modifying the agreement that you have signed with any company. Okay, so definitely that income has to be recorded here. Any agency you are modifying, you are holding agency in India. It's like you are having a foreign holding company or Indian subsidiary company, or you are Indian agent, and you are terminating or modifying your any terms of contract. Then definitely it has to be included here in the income. Next, income from a specific service performed for its member by a trade or professional. So usually we call it AOP or BOI, Association of Person and Body of Individual, and its member, they enjoy the principle of mutuality. Principle of mutuality means usually a body of individual or association of person cannot earn income from their members. Please understand, because it's like you three people, you are three friends, and you three people have came together and you have started one gym. Okay, and you also go there and do the gym. Now your gym as an organization, which is body of individual or association of person, cannot earn money from you. But if any specific service is provided to you by the association, please understand, then that has to be included in the PGBP, and there is dedicated section for and dedicated assessment procedure for assessment of AOP and BOI. There you will understand more in detail. Even now GST is applicable. Even AOP and BOI providing any services to its own member, GST is also applicable. Even that clarification is added in GST chapter. So that is for AOP and BOI or trade association. Okay. Incentive received or receivable from export business. So unless and until person is into import export business, this particular clause is not applicable, and you need to know this clause very well, because unless and until you understand this clause, you cannot understand what type of reporting is happening in clause 16 of form 3CD. So whenever you are into export business, definitely you are bringing a foreign currency to India. So government of India will be very much happy with you. So they give you a lot of subsidies and incentives. Those incentives are generated because you are into export business. So it's not income from other sources or capital gain. It is PGBP only. Whatever benefit you are getting due to export may not be your direct business activity, but those benefits should also be taxable under PGBP. That's what section 28 says. What type of benefit you will get? Profit from sale of import entitlements, cash assistance against the export under scheme of Government of India, custom duty or excise duty repaid or repayable as a drawback. Drawback means when you have manufactured it, you have paid the excise duty or you have paid the GST, and when you have imported a raw material, you have paid the import duty, and now the goods are exported. So you will not be paying export duty. Forget about that. Whatever duties are paid before this to make these goods available in India, though the duties will be refunded. Drawback means nothing but refund of duties paid. Okay, so refund of import duty and refund of excise duty is known as the drawback, duty drawback in customs law. Profit on sale or transfer of duty entitlement passbook scheme. So because you are doing the export, government will allow you certain duty-free import. You are not going to import that. So you will sell that particular license to somebody else. You will make some money out of it. That money should also be taxable under PGBP. Okay, next, value of any benefit or perquisite is like a gift. Okay, if your customers are giving you any gift, that gift is taxable. Usually in income tax, gift up to 50,000 is not taxable, but that is in IFOS chapter, not under PGBP chapter. If your client is giving you even a gift of 12,000 rupees because you have provided him a very good service, some incentive, additional incentive, you demanded 1 lakh rupees fee, client have given you 1 lakh rupees fee plus iPhone. Okay, so now your income is not only 1 lakh rupees fee, that iPhone it should also be considered as your income and it should be taxable here, whether it is a monetary or not. So the gift or perquisite that you are getting from the business, it may be mean money terms or it may be non-money terms, but it should be included in the taxable value, and there is no exemption here. You should understand there is not even a 5,000 rupees exception. Anything that you are receiving due to the business or profession should be considered as income and should be recorded here. Next, any sum due to or received by a partner of a firm. So what partner received from the firm? Partner may receive interest. Usually interest is taxable in IFOS, but interest received by a partner is taxable under PGBP. Salary, bonus, commission or any remuneration, usually it is taxable under salary head, but salary earned by the partner is taxable under PGBP head. So that is applicable to partners of a firm. If they are receiving any of this income, it is taxable as PGBP. Then any sum, whatever, whether received or receivable in cash or coin under an agreement for carrying an activity, for not carrying an activity, is it non-compete fee? It is known as non-compete fees. It is also covered under section 194J. You know, there is a TDS on 194J. Somebody is telling you do not carry. So if PepsiCo is paying to Coca-Cola not to sell Coke product in particular region, okay? Or you know that this networking company, they are having the exclusivity. If Hathway Internet is there, okay, there is a company called Hathway Internet is there, and then SwiftNet, there is another company called SwiftNet, and there is a company called Hathway. Okay, where Hathway is providing internet and direct to home DTH services in particular region, particular society, they will not allow SwiftNet to provide services in the same locality. Same will happen where SwiftNet is there, Hathway will not enter. So this network company, they have decided their area, geographical area, we will provide exclusive services in this area, you provide exclusive services in that area, we will not enter it there, you should not enter here. If they are making any payment to each other for not carrying on a business activity, so if you carry business and earn money, it is taxable as a PGBP. If somebody is giving you money for not doing an activity, that is also taxable under PGBP. You are an advocate, you are a very famous advocate, an opposite advocate is paying you a couple of lakhs of rupees for not accepting the case, even that is a PGBP income. Okay, so these are the things which is received here. Then there is something called amount received on Keyman insurance policy. It is very detailed discussion. And fair market value of inventory converted as a stock in trade. A stock in trade converted into capital asset. We have already discussed capital asset conversion into stock in trade. Here the reverse also happens sometime. Sometime assessee convert stock in trade into capital asset to save taxes, because in capital gain chapter you have certain exemptions. Those exemptions are not available under PGBP chapter. So to claim those exemptions, assessee sometime converts stock in trade into capital asset. Even that is taxable in the year of conversion itself. It is taxable. Okay. And last one is any amount received on transfer of asset under section 35 AD. Section 35 AD gives you 100% deduction, specified businesses, 3-star hotel or hospitals with 100 plus bed, cross country pipeline. So many businesses, I guess 15 businesses are there in section 35 AD. If you are selling any asset that was used for 35 AD business, definitely you have claimed the 100% deduction. Now on sale, you should get that particular income under your PGBP. So this is section 28. So it is very detailed. You can see it is not normally sale and purchase. Sale is not only talking about sale. So it is inclusive of so many other items. If those items are falling within scope of section 28 and not considered by the partner or not considered by the assessee, you have to show it under clause number 16. Next. Any drawbacks, performa credits, refund of custom duty, if it is there, then that also should be disclosed here. Next, any escalation claim. What is escalation claim, sir? You have signed the contract with government that you will construct a bridge in 100 crore rupees. But suddenly due to COVID and all, the raw material prices, the cement prices, steel prices has gone up substantially by 40% minimum. Okay. And now you know that within 100 crore you cannot complete the project unless and until government gives you another 50 crore rupees as escalation. You are not going to complete this project. You will end up making losses, and that's the reason if you have put any escalation claim, and if that escalation claim is accepted, very important, not escalation claim raised, escalation claim accepted by the government. They have not given you money yet, but they have at least accepted the escalation claim. That means today or tomorrow you will get the money. So that reporting has to be done under clause number 16. Any other item of income, okay, if there is some income but it is not credited by the assessee to the profit and loss account, you should credit it here. Definitely when you are crediting here and assessee has not credited, you can expect the assessee is going to get scrutiny notice for sure. Any capital receipt. Now why they are talking about capital receipt? Because capital receipts are not taxable, isn't it? Usually capital receipts are not taxable. Only selected capital receipts are taxable. But whether the receipt that you are talking as a capital receipt, genuinely whether it was a capital receipts or not, for that there are so many Supreme Court and High Court judgment that we have to see, and that's the reason they are saying if assessee have received something as a capital receipt and he has not credited to profit and loss account, you please disclose it here. So if tomorrow AO wants to cross verify, if tomorrow assessing officer wants to cross verify whether that receipt was a genuine capital receipts or not, then the AO will definitely raise a notice under section 143(2), a scrutiny, and he will come and verify whether the receipts were genuinely capital receipts or not. So yeah, this is the overall clause number 16 for you guys. Okay, and appropriate accounting auditing checklist is there. Whatever I have discussed, only that is written here. You have to maintain a detailed performance for technically for customs. For custom there is a performer, they have given custom refund, date on which claim was launched, that is for duty drawback, nature of claim, amount, status of claim, stated at the end of the year, whether the claim is received after the year end or not, date of receipt, any specific remark. Escalation claim also they have given this dedicated thing to be looked into. To understand escalation claim, you need to understand construction costing, construction companies accounting, any other income, and specifically capital receipt you need to focus upon. Any subsidies and all given by the government for acquiring, any subsidies and given by the government for acquiring a fixed asset is a capital subsidy. And based on that, there has been a question, okay, while writing the tax audit program of A Limited, you wish to include possible instances of capital receipt not credited to profit and loss account, which needs to be reported under clause 16E of Form 3CD. Please elucidate possible instances. So they are asking, give some example of disclosure. So look at the disclosure of capital receipt which are not credited to profit and loss account. Capital subsidy received from the government grants which are in the nature of promoter's contribution. So government is giving you money as a promoter contribution. That means they are giving you fund to run a business. That is fund given with a total investment of the undertaking by way of contribution of the capital outlay. That is capital investment subsidy scheme. So this scheme is there. Government grant in relation to specific fixed asset. You wanted to buy a very technical machinery and it's very expensive. So government is giving you subsidy to buy a particular asset. It's a capital subsidy and it should be subtracted from the cost of the machinery and it should not be recorded to the P&L account. But here in clause number 16, you have to give the disclosure for the same. Compensation on surrendering certain rights. Okay. Profit on sale of the fixed asset or investment. It's a capital gain, no? Profit on sale of certain fixed asset or investment to the extent not credited to the profit and loss account. So you have to give this kind of disclosure in section clause number 16. Okay. Thank you.